Trading gold is all about understanding how price moves, why it moves, and where it wants to return. And for me, two tools have consistently shown clarity in the middle of chaos: Fibonacci retracement and fair value gaps. Not indicators, not signals, not prediction, just structure, imbalance, and the natural rhythm of the market. Gold is fast. Gold is emotional. Gold is aggressive. But even with all that volatility, it still follows a simple pattern: expansion, arrow, imbalance, arrow, retracement, arrow, continuation. And this is exactly why the combination of Fib and FVG works so well. When the market makes a strong move, an impulsive expansion, it often leaves behind inefficiency. A place where price didn't trade fairly. A place where the market moved too quickly for both buyers and sellers to interact at balanced prices. That gap, that imbalance, is what we call a fair value gap. And trust me, gold loves to revisit those areas. At the same time, every impulsive move eventually needs a correction. Price never moves in a straight line forever. It expands, and then it breathes. It needs to pull back, find discounted or premium levels, and then continue with strength. That's where Fibonacci becomes powerful. Not because it tells you the exact turning point, but because it shows zones where the market naturally finds value again. When you combine these two ideas, the imbalance that needs to be filled and the retracement that needs to happen, you start to see the flow of gold very clearly. The beauty of this approach is its simplicity. You're not trying to predict every candle. You're not forcing trades. You're simply waiting for the market to do what it always does: return to balance before it continues. FVG shows where price wants to return. Fibonacci shows where price is likely to return. And when those two areas overlap, you have a zone that matters. A zone the market respects. A zone where probability is on your side. You don't need 100 indicators to confirm it. You don't need to overthink it. You just need patience. Most traders don't lose because they don't know analysis. They lose because they don't wait. They chase the impulse. They enter too early. They sell when price is too low. They buy when price is too high. They try to catch the candle in the middle of the move instead of waiting for the retracement. But when you trade with Fib plus FVG, your mindset changes completely. You stop chasing. You stop reacting emotionally. You stop trying to catch every move. You let the market come to you. Because now you understand something deeper. Every sudden move leaves unfinished business behind. Every expansion creates inefficiency. And the market almost always returns to clean it up. You're not trading randomness anymore. You're trading the market's need for balance. Fibonacci gives you patience. It gives you structure. It gives you a reason not to jump in too early. FVG gives you timing. It tells you where price still has something to fix. It shows you where liquidity is missing. It shows you where the market still has a job to finish. This is what makes this method powerful on gold. Gold respects imbalance more than almost any other asset. It hates inefficiency. It hates unfinished gaps. And it loves to snap back into those zones with precision. But here's the important part. This method is not just about tools. It's about mindset. You need the discipline to wait for your area. You need the patience to ignore everything outside your zone. You need the emotional strength to let the setup come to you. Many times, the market will tempt you to enter early. It will give you small moves that look like entries. It will try to break your discipline. But the traders who succeed with this style are the ones who wait for alignment. FVG plus Fib in harmony. Because that combination removes guesswork. You're not hoping the market turns. You're not praying a candle rejects. You're not trying to catch a top or bottom. You're simply reading the cycle: expansion, imbalance, retracement, continuation. And when you wait for the retracement into imbalance, your trades naturally have higher risk to reward. Your stops become tighter, your targets become cleaner, and your confidence becomes stronger. Not because you're predicting the mark, but because you're following how the market always behaves. This approach is not about being right every time. It's about being consistent over time. You will take losses. You will get stopped out sometimes. You will see setups that don't fully return to your zone. But that's okay, because when the setup does align, when the Fib retracement matches the FVG, those are the trades that can change your week. Those are the trades that pay for the losses. Those are the trades that remind you why patience is an edge. If you can stay disciplined, if you can wait for your levels, if you can avoid the noise and stick to structure, this simple combination can become a complete system for trading gold. It's not magic. It's not a shortcut. It's just price doing what it always does, filling its inefficiencies, retracing into value, and continuing in the direction of strength. Your job is not to control the market. Your job is to understand it, to respect its rhythm, to wait for the correct moment, and to trust your plan more than your emotions. Because in the end, trading is not about predicting the future. It's about aligning yourself with the truth of the market. And the truth is simple. Gold rewards those who wait. Welcome to God's money.